Hello, Jimmy.
Jeremy, how are you?
I'm doing great.
Wonderful.
Doing great. It's a wonderful day here in September.
Yeah, it's beautiful.
Absolutely beautiful outside. But we're glad to be here between two fiduciaries, between the ferns.
Yep.
We're going back to a oldie but a goodie.
Right.
It's the 4 benefits of financial planning, and trust me, folks, we're not going to make this boring. This is going to be hard hitting.
Yep.
It's going to get straight to the point with what it is that financial planning ultimately gives to you as the person in the seat looking to have things figured out.
Well, I think it's a very nebulous concept, right? Like we say that quite often, but yes, there are plenty of benefits. I think there could be more than 4. We're going to focus on 4 of the primary, right? But yeah, it's fundamental to the decision-making process for us with our clients.
We can't stress how big of a deal financial planning is when you're figuring out how you're going to take your investments, how you're going to take your retirement, what you're going to do with your money.
Right, absolutely.
All right, so we thought we would start out with what is financial planning. We're not going to spend too much time here, but we want to show you this is straight from the Certified Financial Planning Board.
Yep.
They're sort of the authority, right, on financial planning in
Absolutely,
the world.
absolutely. We always say that the CFP is sort of like the gold standard in the industry.
Mm-hmm.
I think most folks, the analogy I usually give is that most folks understand that if you want somebody who's a master or an expert on taxes to be helping you with your taxes, you want a CPA. Well, if you want to be working with somebody to help you with your financial planning, you want a certified financial planner.
Indeed. So I thought this one was interesting because this is from the study guide.
Right.
To become a certified financial planner. So you can see the weighting that they put on the different elements of the financial planning process. Most everybody thinks it's always all about investment planning, right?
Right.
That's 17%.
Yeah. Yeah.
Less than 1/5
right.
of this whole pie is investment planning. So there's a lot of other moving parts and pieces here. Retirement savings, income planning, estate planning, the psychology of things.
Right.
Just your good old-fashioned financial planning and general principles, risk management, things like insurance, and then again, investment planning.
And one of the things I would say that that makes becoming the CFP why it is the gold standard is integrating all these different disciplines that fall under the financial planning umbrella is so important, right?
That's right.
And it's also difficult to obtain the CFP certificate because of the breadth of the material that is covered in the exam required to take the test that you have to take and pass to become a CFP. There's so much that goes into it.
It is a tough process, and it's not easy to obtain it. All right, getting right into it. Benefit number 1 of financial planning, knowing your current and holistic finances.
Yeah, so we like to start with balance sheets, right? I think it's a great way for when somebody is coming to start to have a conversation with us about potentially working together. This is a great place to start to break down, what are your assets and what are your liabilities so we can figure out what your net worth is.
Mm-hmm.
But oftentimes, I think it seems very simple, but it's a very helpful exercise for individuals to go through to actually have, bring their 401k and outside brokerage accounts, and maybe they inherited an account from a parent who passed, right? Bringing all those accounts, and those accounts might be held at different places with different custodians.
Indeed.
So bringing them all together, bringing in the mortgage, if you have any credit card debt or student loan debt, bringing that all together into one, snapshot in time of what your net worth is a really beneficial exercise for folks to go through just to, again, that holistic finance, right? Bringing everything together into one place.
It is. Sometimes we call it the spring cleaning aspects of your finances, just getting things under one roof, cleaning it up, understanding it.
Yeah.
Getting a good snapshot of, okay, here's my assets, what are my liabilities, and then what is my net worth.
Right.
Having that as a basis point to pivot off of, just a really good foundation.
Absolutely.
Benefit number 2 of financial planning, it really goes into the forecasting your financial future.
Yeah. So this is, what do they say? Like, hope is not a plan.
Right.
Or hope is not a strategy, right?
Yeah.
Like, the ability to take what you have from the balance sheet, and then now we're bringing in cash flows here and forecasting out the best we can with the information that we have today and projecting out into the future. It certainly helps provide the proper context for individuals to start better assessing where they currently stand and what they're, then you can start, creating goals and prioritizing them and figuring out which ones are attainable, maybe
Yeah.
which ones are too lofty, or if we want to obtain those, what sacrifices might we have to make? Well, if you're just kind of, doing this in your head and you're thinking about your 401k in a silo and your brokerage account in a silo, and you're not really thinking about your mortgage and, the cost of healthcare and taxes in the future, that's really difficult to process in one's head. So putting it together into a comprehensive plan, with the ability to forecast in the future, provides really good context for individuals to understand, the decision making.
Great context. I love it. Know that it's, the further you get along in the cycle, meaning the further you are away from the current date, it's going to be a little less accurate. We
Sure.
know that.
Yeah.
We're not looking for 100% certainty on cash flows, but to see directional trends,
Right.
it's really important. So important. And it does lead directly into this other statistical measurement called the Monte Carlo that we use to give an idea of whether or not somebody's actually going to have enough money to
Right.
make it from where they are today until the time that they pass away.
Right. We don't need to get into the statistical nuances of Monte Carlo.
Right.
Right. But I think a simple way to conceptualize that is that a Monte Carlo simulation is the best tool that we have to simulate volatility in capital markets.
Mm-hmm.
Right. I think folks might assume that they're going to have some average rate of return given their portfolio dynamics over some period of time. And that's great, but we know that markets don't work in linear fashion. Right. So we need to do, this Monte Carlo simulation allows us to simulate volatility to provide some, improved probabilities around the potential for success given their goals and their assets.
Well put. I always say it's pressure testing.
Yeah.
You and to figure out where the leaks are.
Right.
And so we can figure out how it is that you can mend that. And if it's something you can't mend, you just have to deal with it.
Right.
And
Yeah.
knowledge is power.
Absolutely.
Benefit number 3 of financial planning, enabling good financial decision making. So, I mean, it's basic.
Right.
It's basic, but if you aren't able to if you don't have these foundations that we've just explained,
Yeah.
how are you going to have good decision-making capabilities?
Right. It seems counterintuitive,
It
right?
is. So we always say this is the starting point.
Yeah.
If somebody were to ask us, what should we do with our finances? It's a complicated answer because you always have to start with the foundation, and then from there you can build up.
Well, that's the kind of the joke with us, right? Is that, you get asked that, like, a cocktail party or some sort of event where somebody asks you, should I buy this stock or should I buy that stock? And I know it's a simple question, but we always say, it's a much more complex answer, right? Because we need to understand these other foundations of your financial life before we can give you the best advice possible.
It's a real party killer because nobody really wants that. They want the hot stock. They want the hot tip.
Exactly.
But the true answer is much more complicated.
Exactly. So one of the things that we're looking at here that that we think is critically important to building out a well established portfolio that's a little bit different maybe from what folks might think of on the left side of the graph here, where we're looking at the tax allocation of the portfolio. If all of your retirement assets are saved into your company's 401k plan, well, then all of your money is going to be in pre-tax dollars, which may or may not be a good thing.
Yeah.
Right? We don't know what your tax rate is right now, or if you're not analyzing what your tax rate is now and projecting that out in the future, it may or may not be the right move for you.
Right.
Right. And so it's important. We talk about this asset location and tax diversification. That's what you're seeing on the left side. There's a tax diversification of having investments and savings in the different account types that all 3 account types that you see labeled here, the taxable asset, the tax deferred, and the tax free, they all have very different tax treatment. So having some money in each of those buckets, how much should you have in each bucket? Those are things that we should be, working through and analyzing together with clients.
So relevant for different points in your life as well. Because if you know this at your 30s, Look, you can make some changes to diversify your different tax profiles, right?
Right.
If you're in your late 50s and you're thinking about retirement, maybe you don't have as much time to change the tax allocation, but knowing what your existing allocation looks like from a tax perspective enables you to make much better decisions in retirement.
Right.
So it's a
Absolutely.
huge deal. And then that all sort of leads into, the investment planning side.
Right.
This is where people kind of typically think that they're going to get, spend most of their time, and we're not discounting it. It's huge.
Absolutely.
But yeah, I do all this different analysis, research, and hard hitting data crunching, and then all of a sudden you get to the point where you can build out your allocation.
Right. And we know that, choosing the allocation as far as, investment allocation, which again, I think is what most folks would, anchor to thinking financial planning centers around. But really that the asset allocation piece we know is a critically important decision for being able to project out, and have more, having a better idea of like what your expected future returns might be. That answer is going to come from the choice that you make on what the investment or your asset allocation is. So how much stock compared to how many bonds you want to have in the portfolio.
Indeed. So there's a lot of details underneath the hood of your investment allocation and then your investment planning. It gets into very, very granular spaces. This is kind of just a big highlight piece,
Exactly.
right?
Yep.
Last but not least, benefit number 4 of financial planning: diffusing bad decision making and stressors.
Yeah. This is, we see it all the time where folks say, "Oh, can you get me out of the market and then, get me back in when the coast is clear?" And as we know, it just doesn't work that way. Um, but we see this too often that people want to, inherently buy at the top of the market because things all seem very good. And then when the market has pulled back and we're experiencing some negative volatility, they want to get out.
Yeah.
Right. And then so
Or
really,
ideally, they'd love to get out,
yeah,
as we all would, right?
right.
Before the drop, right?
Yeah,
And
absolutely.
then jump back in at the very right time before it goes back up again.
If it were only that easy.
If it were only that easy.
And this is something that, it doesn't matter. There are so many different ways to invest money, right? Like passive investment, active investment. We've had a bunch of different, Two Fiduciaries covering the different investment philosophies. But the one, hard and fast rule that, I don't think anybody disputes is that knowing when to get in and out of the market and doing that consistently is impossible.
Yep.
Right? Warren Buffett's the whole, it's not timing the market, it's time in the market, right? And so that's what you see with the graph on the left there. And if you're following those, if you're following your emotional biases, it can be very detrimental to your long-term financial success.
These two things are very connected to one another in terms of, our unconscious biases that we have,
Right.
our fears and our concerns. They're going to potentially lead to some choices that are going to be poor. So being aware of these things is really half the battle.
Yeah.
And knowing that, there's going to be, it's not an if situation, it's a when situation. The markets are going to go from good to bad.
Sure.
It's going to happen. Now the question is, how is your psychology going to play with that data?
Right.
How is it going to deal with those stressors?
Yeah, exactly.
And so look, part of this financial planning process comes back to that whole financial psychology, trying to build this strong plan that you can lean back into and know that you're more durable than a particular moment in time in the market, and you're going to be able to ride it out, right? Especially if you're well invested with the proper allocation based on you and you alone.
Right, absolutely. Yeah, and the whole unconscious biases, right? This is something that's really become much more prevalent in financial planning. Understanding it, the amount of academic research that has gone into the behavioral side of investing, right? And that has grown in popularity. There's so many different books and the researchers and the Nobel Prizes that have been awarded for the studies here. It's really been interesting to kind of be in the industry as this element of the planning process has come far more into the spotlight and much better recognized.
Well, it adds a lot of human to human interaction here on this side when it comes down to coaching people, helping them through tough moments.
Right.
It's what good financial planners are able to do.
Absolutely.
So we're happy to be in that group that does help people to make good decisions, diffuse bad decisions, and
Right.
reach their goals.
Absolutely.
Well, that's all we have. So here we are in 15 minutes. You guys understand what the 4 benefits of financial planning, but there's a lot more to it. If you guys want more information, reach out to On Track Wealth Management. Happy to help.